Hi everyone. So today, today we're going to discuss about one of the key functionality in accounts receivable cloud application. So the topic is AR to GL reconciliation, accounts receivable to GL reconciliation, which you could run in the during month-end activities, or once you close the period also, we can run this reconciliation report to verify the balances or compare the balances from subledger to GL application. So that's where you can use this functionality, which is very, very significant functionality in the accounts receivable module. So let's get into the theoretical information which we have. AR to GL reconciliation, general ledger reconciliation, fusion receivables. And here you can see the functionality and what are the jobs we need to run in order to generate AR to GL reconciliation report. So this is the job name, prepare receivables to general ledger reconciliation. That is the ESS job. And the description, prepares transactions and accounting information for reconciling Oracle Fusion receivables to Oracle Fusion general ledger model, which is subledger to GL model. Yeah. Functionality. So here I can see that setup and these things. Here I mentioned as a task to change it here. Okay, and here I would say setup is offering financials and function area is billing, and task name is that AI to GL reconciliation. Okay, so here, so what and how it is going to reconcile during the reconciliation period. So the receivables to general ledger reconciliation report reconcile the transaction types that impact the accounts receivable in general ledger. This includes as below: invoices, debit memo, credit memo, on account credit memo, chargeback, sorry, adjustments, applied receipts, on account receipt, unapplied receipt, unidentified receipt, bills receivables, and bills receivables application. So here logically we can understand one point of view: transaction types. What are the transactions we are going to entering into the AR application, which is towards point of view accounts receivable transactions? Those things only it will be reconciled in this particular report. That's what we can easy to understand and keep in mind while we run this job during the month-end activities as well as. Okay, so invoice. What is the accounting entry will get generated? Receivables to revenue, right? So it is here, receivable is the debiting. So that's what it is pointing out towards transaction types. What are the transaction types? Are wherever we are going to discussing or passing entries in the application by using receivable account. That's where these transactions will come in the picture. Okay, so that is how it is. Yeah. Differences between transaction and accounted amount. So ideally, what is the transactional and accounted amounts? Transaction is nothing but as where the business users are going to entering or creating a transactions by using the accounts receivable application in the Fusion application. Those things comes under the transaction activities, nothing but as a sales invoices. And accounted, when you create or enter invoice in the accounts receivable model, after that what we have to do it as part of the process, we need to run the create accounting job, right? So when you run the create accounting job, there is a two options we have. One is draft mode, second one is final, right? Post to ledger, that is called as a final mode. So here, when you run the create accounting job at the final mode, the subledger transactions which the account, mean to say business users are being creating, those entries will be transferred from AR to GL application. That is called as accounted amount here. That's how we have to understand it. So ideally, the summary report should be display no differences between receivables to receivable transactional amounts versus accounted amount. It means that when you enter any transaction in the AR, let's say example, transaction value is $100, and when you run the create accounting job, what we are doing it, just we are running the create accounting job to transfer these $100 of the transaction information to GL model. That's all we are doing it. We are not entering anything. We are not going to modify anything at all. Okay, the common ranges for differences between transaction amount versus accounted amount include transactions that are not accounted. It means that you created, the business users are created the invoice but not yet run the create accounting. It means that not accounted. And transactions with subledger accounts that falls outside the account range of the report, and transaction amount do not agree with the subledger journal lines amount. Journals are posted to subledger or general ledger that did not come from the receivables. Subledgers, this is the final one. Subledgers journals were not transferred or posted to GL. So these are the common generic scenarios where you could see the differences between transaction versus accounted amounts. If you see the last comment, the last scenario is that subledger journals were not transferred or posted to general ledger. It means that we created transactions but not yet been transferred or not yet been posted to the GL, because the whole functionality is saying about it how we are going to reconcile the subledger application versus general ledger application. It means that we need to be very make sure that all the accounting entries has been transferred to GL before run this program. Okay, that's how it is. And second thing is, if you look at journals are posted to subledger or general ledger that did not come from the receivables. It means that the receivable natural account, which we are using for the auto accounting purpose or when you create a transactions, right? So that particular accounting entries, maybe the mistake and the business users can directly pass the entries into the GL model by using the natural account of transactions. That's where, because ideally all the informations has to come from your subledger model itself only. But here there could be possibility where business users can pass the entries in the GL model directly for using the natural account of receivables. That's where the balances will come out. So these are the generic things which you can keep in mind while run this program for reconciliation purpose. Okay, so let's get into the application to see the configuration and other things. So already I have posted some of the entries by using the accounts receivable model for testing purpose or demo purpose. I posted here. Okay, let's go to the application here. If we see, yeah, if you see here, if you see, so what I mentioned here in the PPT, this is the ESS job. When you run the ARGL reconciliation report, first we need to set and run this particular ESS job. Prepare receivables to general ledger reconciliation. What it does, it will collect all the information which eligible transactions are available in the application from the both the applications. One is receivables, second is that general ledger reconciliation report. General ledger, right? So it will pull all the information into one place and keep it the data ready for us, and then we can run the report from the front end of the receivable model. Okay, so now we'll go and look at that, how to run this job. Go to schedule new process. This is the job, prepare receivables to general ledger reconciliation. And here you can see that the description says that prepares transaction and accounting information for reconciling arrival fees and receivables to arrival fees and general ledger model. Say yes, but this is how we can run it. But I already run the program, so just I will show that like how to run the and what are the parameters mandated to provide it here. Okay, so here you can see request name. This name can be given at anything. That is based on your needed or business users how they wants to keep it as a name. Let's say example Jan 24. Jan 2024 is the one, and ledger. So which ledger is impacting to the when we do the all the accounting entries? That is primary ledgers. And optionally we can select the which business unit you want to run the report. If you want, you can keep this one. And accounting period. This is the key factor here which we have to select it. I selected as previously as 124, which is Jan 24. And these are the fields are as option fields. If you want, you can include it or you can ignore it. And this is the one if you want to, if let's say example, if you have the accounts receivable, multiple accounts, nature of the account which you are using, then you can add the multiple accounts here by choosing the account here. You can give the respective receivable accounts here by selecting the natural account number. That's how we can run the program. Once you submit this program, this is the like I mean to say parent and child ESG will triggered and succeeded here likewise. Okay, so once these programs are getting completed, go back to the home page. Now where you can go and see the report on the front end. The navigation part is go to billing, go to billing, go to task menu. Under the sorry, I mentioned here wrong. Once again. Yep. Go to home. It will be there in the receivables actually. Yeah, accounts receivables, task menu, and here accounting. Under the accounting, you can see there are 4 tabs are there, which is the last one saying that receivables to ledger reconciliation report. Just click on that. Don't worry, it may take a while, which will say here blank screen ideally, but sometimes it will come soon. Sometimes it may take some time to display the data, so that you can have some patience until get populated the report on the screen. Requester name I given as Jan 24. If that is not populating here, no need to get panic. Click on search and search with the contains at Jan 24. This is the one I ran actually. Previously, I ran a GL reconciliation report Jan 24, and again I ran the report Jan 24. When you run the first time AR to GL reconciliation, there was no any data at all. But after that, what I did, I entered 2 transactions. One is the invoice. Secondly, I created a receipt and apply on the open transactions, which needs to be mark off. So that's what I did the transactions in the Jan period. Let's say select now, just click on save OK and click on apply. So now the system will bring the report which we have in the backend. Now we can see. So data preparation attributes, data extraction, date and requester name, which we have given the parameters, and ledger, which we have given the parameters, accounting period, which we have chosen the parameter here, including intercompany transaction, yes, or what is the things we have selected over there. Those things will come automatically. And now the second table. This is the actual table which will give the right pictures about the reconciliation. Receivables to ledger reconciliation summary. First, we need to understand what are the components are coming into the under this report. The left hand side, you can see what are the components are part of here. And headers, receivables amount USD. If you're using the multiple currency, then it will be populated automatically here, those things as well as. And accounting amount USD, differences USD. Since we are using the mother currency as USD. And accounting beginning balance is accounting balance here is receivables is 0, and here it is showing as some accounted balance are available in the vision application previously, that is populating over here. Non-receivables beginning balances is coming here, and this is the summary of the transactions. Debit and credit will be always is equal. Okay, and now here you can notice here, this is the most important critical part which will says about PTT level. P to PTT is nothing but P present to date. What are the transactions are being entered in the application, the particular month, those things will comes here because we run the report accounting period, the specific one here, Jan 24. So what are the accounting entries are being generated during this accounting period? Those accounting entries will get populated under the respective category of the components here. Invoice, if it is invoices, the information captured the under the invoice. And adjustments, it comes in the adjustments likewise. So here we look at invoices, which have we discussed in the here. If you look at which are the transaction types that impact the accounts receivable in general ledger. Invoices, debit memo, so on forth, right? Similarly, you can see invoices, adjustments, bills receivables, receivable application, which I have shown here, and then other accounting, which is not part of this. All things will comes under the other accounting part as well as. And here you can see receivables and balances. Okay, so here the balance will get added to this particular the previous balance tab here. Received beginning balances. The formulas will comes like as a opening balances plus transactions minus receipts, and then you can see the whole total amount of the balances, isn't it? So here you can see invoices. Here 1197 is the invoice balances. When you go and place a cursor on the number, the amount value, automatically the system will blink the hyperlink. When the line is available under the value, that means that there is a hyperlink available here. Okay, the similarly here, if you see that receivables, in the receivable, I entered one invoice and I have seen that one other invoice also entered by the other person. That's what is showing as a 1197.25. And here you can see after I create the transactions, they ran the create accounting and transfer the balance to the GL. That's where this balance is coming here, 1197. Okay, and difference column is 0. Okay, so and similarly, I created one receipt which comes under the applied receipt. If I didn't apply on the receipt, I mean to say the transaction, these values should have been shown under the unapplied here. Okay, and accounted. When you see the balance is showing under this particular bucket, it means that we already run the paid accounting job. That's how we should understand it. If something is comes in the differences value, then we need to go and click on the hyperlink, and the system will give the drill down to understand the differences, why it has come the differences here. So if you want to see how many invoices content of this value, if you go and click on the hyperlink, the system will try to give the balances of the this values. Let's see then. It may take a while. Yeah, here you can see now. See, invoice details, time ran, so and so date. Here you can see accounting date, so and so date, customer name, Vision customer and easy solution. This is what I have created actually. Easy solution customer name and $1,090. And somebody has already created one of the invoice 107.25. So this is the breakup of the value of the which is showing in the reconciliation report. Go back to the reconciliation report. Here you can see. Similarly here, just click on the hyperlink and wait for some time. Yeah, one thing I created one receipt. This is what the receipt number is 78. I created, and this is the applied transaction number, so and so, and this is the value, which is showing as a minus value. And finally, accounting created, yes. If not done, to show as a no. So that's how we can see this report. So this is how we can create a report for month-end activities whenever you wanted, or not only month-end activities, whenever the business users wants to do the reconciliation to compare the subledger balances versus to GL balances. Then they can go for this particular option to generate the report and validate the values. And the best advantages of this report is that in the EBS, we do not have this kind of flexibility. And whereas we need to run the multiple reports to do the reconcile and make sure that all the balances are matching with each other or not. But here in the Fusion application, the Oracle has given the solution designed as such, like as a very simplified, saying that this is the customer can go on this report instead of multiple reports and do the reconcile at one shot to identify the gaps between the AR to GL report. This is how we can do the reconciliation. Okay, so summary of this discussion. So these are the transaction types will comes under the AR to GL reconciliation report. And this is the ESS job which you need to run previously before going to generate the report. You need to run this ESS job and kept data ready. And so what are the common errors will occur when you do the reconcile? So these are the common